So the headline numbers in terms of activist campaigns are slightly down from last year, still well up from the year before. But the reality is that most activist campaigns are behind the scenes. Really the tip of the iceberg, that's all that we're seeing in the public. Activists try to work behind the scenes as much as possible, and it's only at the time when there's some sort of breakdown in communication or there's simply no resolution that can actually be achieved between the company and the activist, or there's a leak that we actually see it be public. But the reality is, given the volatile markets, and we have VIX now at about 25%, pre-pandemic it was about 15%, volatile markets are incredibly attractive to activists. That's where they can find their opportunities. And what they're looking for right now in the current market conditions, especially with rising interest rates, it's all about cash. They're trying to get the cash out of companies. They're demanding that companies really think very carefully about their capital allocation and really thinking carefully about their growth capex, about their bolt-on M&A, and whether they should be doing that or handing back cash to shareholders to address undervaluation concerns.
Which is fascinating, because I think on Main Street, most people's understanding of activism is around ESG at the moment. They see the oil companies being challenged. They see BlackRock being challenged. We recently had a fund on who have been very aggressively targeting BlackRock and calling for the head of the business to leave, arguing that their assertions around their climate commitments are misleading. That's one area that I think the public sees and recognizes, but you're talking about something very different here, which is about unlocking value in businesses. In terms of the relative scales, would you argue that the claw and tooth capitalist element of trying to release value is much more significant at the moment than the ESG aspect?
Absolutely. So what we're seeing in terms of ESG, certainly there are campaigns that have an ESG element to it. But the reality is that most of the ESG is being used as a basis for breakup arguments. That's certainly what we've seen in the energy space. Now, there are pure ESG campaigns, but that's more tangential in many respects, as opposed to the core fundamental financial activist theses that the activists are in fact pursuing at companies across Europe.
Darren, so this is rank hypocrisy from some of these activists who basically say it's because of ESG. I mean, again, the fund that Jeff is specifically talking about, one minute it's having a go at a European consumer products group because they're not doing enough in terms of giving money back to shareholders or not doing enough for the share price. Next minute, the same group is having a go at a company because they're not doing enough on ESG as well. So is ESG just being used? And I think that's kind of what you're saying, as maybe a bit of a front for breaking up companies and releasing value elsewhere in a good old-fashioned kind of way.
Most of the time, that's exactly what it's about. And certainly at times for certain funds, it's important to have an ESG flavor to some of their campaigns because it's also important for their own fundraising. So when we're on the company side, dealing with companies, dealing with activist shareholders, we need to understand what's actually motivating them. What is the reason behind their asks here? And certainly sometimes the ESG is not a fundamental piece of their financial thesis, but it's an important part of their broader marketing to be able to attract more money into their funds.